couldn't have taxes just been taught to you in grade school? Wouldn't it have been easy if they just taught us taxes while we were learning multiplication, division, subtraction, and addition? We would be so much further along in life as taxpayers if we just had a little bit more education when we were learning about Christopher Columbus sailing the ocean blue. My name is Carlton Dennis, and in this video today, I'm going to teach you guys tax deductions and how you can go about leveraging the tax code to reduce your tax bill. A lot of this information wasn't taught to you when you were younger. In this video, you're going to learn the difference between deductions and write-offs. Let's dive in. And how the federal tax brackets pay into the amount of money we receive in tax savings, we need to understand how deductions work. So as a small-based business owner, we're going to talk about how you can take deductions that make sense. With a home-based business, brick and mortar business, or any other type of business, a portion of the expenses may become tax deductible. Some of your everyday expenses qualify as business expenses, and most business expenses turn into tax deductions, and we should talk about them. I'm going to list out for you tax deductions that most W-2 taxpayers spend their money on that small-based business owners are able to write off as being business owners. Part of the reason why small-based business owners are able to write these items off is because as a business owner, you now utilize some of the personal items that you had inside of your business to help make you income. And if you are utilizing these items, they become ordinary and necessary expenses in the pursuit of the income that you wish to make. So let's go over some of the common deductions that you can take as a small-based business owner. What I'll do is I'll list out 10 common deductions that most everyday taxpayers spend their money on that business owners get to write off. Let's start off with number one, the cell phone bill. Every taxpayer that I know has a cell phone because I talk to them. And if you have a cell phone, you probably want to be able to deduct a portion of that cell phone bill. If your cell phone is used inside of your business for more than 50% of the time, then you can claim your cell phone as a business deduction based on the portion that you're using inside of your business. So cell phone becomes a business expense. Number two, rent and mortgage. A majority of taxpayers are working from their homes or they're renting out a studio or some type of place where they can conduct their business. If you're spending your money on mortgage or on rent and you're using that space, couldn't you utilize that space inside of your business to help generate income for you? Well, this is what a lot of taxpayers are doing to get an additional deduction on their tax returns. Taxpayers are taking advantage of the home office deduction while also being able to take advantage of writing off their rent if they're renting out a space where they're conducting business. If you're a taxpayer that is utilizing a space, a WeWork, or a home office, you're able to claim the portion of your home that is business purpose as a tax deduction on your tax returns. And this is a deduction that you get to receive year after year over and over again. Contrary to popular belief, home office deductions are extremely popular amongst taxpayers, and it's a growing tax deduction that you should not feel afraid to take. Write-off number three, car expenses. The car expense is a big tax deduction for many taxpayers because taxpayers spend a lot of money on cars. And if you're someone that recently purchased a vehicle, you'll come to know that there are tons of ways that you can write off your vehicle. You can choose to take actual, you could choose to take mileage, and that comes with you being able to depreciate your vehicle, which means writing off the vehicle's purchase price over the course of time. If you guys have any questions on how to write off your vehicle, visit this video here above where it teaches you how to write off your vehicle underneath your business. Let's jump into the next one. Write-off number four, the car insurance. Now, many taxpayers are going to have insurance associated with being business owners, personal liability insurance, business insurance, as well as insurance for their car. If you have an automobile that has car insurance, this now becomes a business expense, no longer a personal expense, if you're utilizing your vehicle for more than 50% business. So we want to make sure that we're capturing all car expenses, not just the car payments. Number five, electricity. Electricity often gets missed over as taxpayers sometimes will include their home office expenses, but they won't think about the utilities that are associated with having a home office. This includes the gas. If you're utilizing your home office space, that includes some of the utilities associated with your home. The gas bill is a utility expense that you have by being a homeowner that gets to be grouped into your home office deduction. You can also group water into your home office deduction. Electricity, gas, and water are everyday expenses that most taxpayers are utilizing inside of their home, working from their home office. I want to make sure that you know that these deductions can also be grouped into your home office deduction as long as you're keeping track of them. All right, internet. Internet's a big one. Many taxpayers realize that their internet bill went up over this past year because they were looking for high-speed internet working from home. And if you are one of those individuals that called your internet company to increase your speed, I commend you because faster internet gets deals done. If you have an internet bill, I want to make sure that we're grouping this into your deductions. Internet's a big tax deduction that we want to make sure that we're claiming every single year. All right, this leads into number 9, laptop and computer. Most taxpayers who are starting a business have a laptop and they already purchased a laptop before they decided to become business owners. Doesn't mean that we can't take the laptop as a deduction. Your laptop and your computer and any equipment associated with it can be tax deductions for you if you are using them inside of your business. So we want to make sure that all of these items, laptops, printers, staplers, are being included as part of your electronics. And last but not least, eating out. I'm a big foodie. I talk about this in some of my videos. But part of the reason why eating out is going to become a very big tax deduction for you this year is because the government has extended the CARES Act to allow for business owners to receive a 100% deduction on meals. If you're someone that is out eating meals with potential clients or business partners, or if you invite potential business partners or clients over to your house to have these meals, you're able to deduct these meals that you're eating. I want to make sure that you understand how you can become a savvier taxpayer, and eating is something you have to do every single day. Why not get creative and turn some of these everyday meals that you have into business meals to help you reduce your overall tax bill? These are the types of deductions that most everyday taxpayers are spending their money on that business owners get to take advantage of. All right, now that we're tackling a couple of subjects, deductions, how the tax brackets work, and really understanding write-offs, let's go over an example of how tracking your expenses can end up serving you as a taxpayer. Let's say that we had Joe, who's a taxpayer that made $50,000 working his W-2 job for the year. And let's say that he was gonna get a tax refund of $1,500. Well, that's pretty nice. But he's already paid tax of $11,500. Well, when you think about it, as a W-2 employee, he's already paid federal and state taxes because he had that withheld on his paychecks. But when you think about it, he really only paid $10,000 in taxes because he received a $1,500 federal refund. So that reduced the amount of taxes that he was going to pay. Now, what if Joe could get back closer to the full $10,000 that he had to pay in taxes? Wouldn't that be nice? Let's continue. Now, let's say Joe has a cell phone bill that he's paying for every single month. And after talking with his tax accountant, he realizes he can allocate that over into his business. And let's say that cell phone bill is $100 a month. Well, that ends up coming out to $1,200 a year. Let's just say that Joe's in the 35% tax bracket. Well, the 35% tax bracket times $1,200 gives us tax savings of around $420. Now, you guys might say $420 is not a whole lot of money, but if you add up the $420 plus the $1,500 that he's already received in tax refund, we're up to $1,920 in tax savings already. Now you guys can see that just chipping away a little bit more at Joe's tax deductions can end up leading us to getting back closer to that $10,000. And that's what it's all about, understanding your deductions and becoming a savvier taxpayer.